Hello, 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 hello. Are we live? Testing, testing, testing. Says I'm streaming. Let's see here. Am I live? Am I live? Hello, hello, hello. Let's see if I'm live. Let's see. Channel. Let's go. All right, cool. So what's up, everybody? Braden Milner here with the Milner team at Florida Future Realty. We are back with your weekly Southwest Florida market update. I'm going to be doing this live today, so it's going to be a little bit different. If I mess up at all, if there's any delays, anything like that, let me know. Let me pull up the chat as well, just in case you guys have any questions, comments, concerns as we go. Here we go. Sorry, it's been a minute, y'all, since I've streamed way back in the day on Twitch. So I got to get back in the groove. All right, let's see here. Channel. And cool. Alrighty, y'all. So we are ready to go. First, I just wanted to say Happy Memorial Day. Thank you to all of the veterans who have, put their lives out there, lost their lives for this country. We were able to, be free and live in this beautiful place because of them. So all their families and them directly, we thank you for that. Thank you for your sacrifice and your service. And we honor you on this day. So let's get started with the update now. It's a beautiful summer day here in Cape Coral, Florida. We're looking about 86 degrees right now. We're at about 9:30, so the sun's just now coming up. We're starting to get to that midday heat. It's going to get to about a high of 90 today. Pretty decent UV index. However, it's not going to get super high like we have been seeing in the past couple days. At least it's been mid 90s, so today will be kind of nice. I'm actually personally going to hit the beach later, enjoy partial of the off day, but I wanted to get on here and update you guys with what's going on first. So now that we got the weather out of the way, again, the only reason I do that, I know a lot of you guys aren't from here. You guys are from different areas, so I want to make sure that you guys are able to see what daily life here is like in Cape Coral, Florida. So let's move along to the mortgage rates. So we've actually gone down a tiny bit in terms of mortgage rates, which is pretty cool. Checking this out right here, we've been watching this for the last couple weeks now. Last week we were at about 7.07%. This week we're at about 7.02%. We're really watching this zone here to see if we break out. To me personally, I'm watching these levels from the beginning of the year. If we start to see, mortgage rates break above this 7.25% average, chances are, at least in my opinion, we're going to be seeing higher rates for longer. So at least personally, I'm hoping that we start to see some relief and we start to see those rates go down. Let me switch you guys over real quick to Trading View. Boring charts. Some of y'all probably don't like this. Some of you guys probably do. However, this is the US 30-year note. So this is each one of these candlesticks represents a day. So over, as you can see, since April, we got a pretty big increase there right at the beginning of April. And then we've had pretty high rates substantially since then. The mortgage rate market follows the bond market. So we're watching these 30-year notes. Hopefully, again, back in the end of the year and in January right here, these correspond with the chart that we just checked out. So when rates peaked in October, those mortgage rates went up to about 7.25%, and then when they came up pretty high in January, the mortgage rates went to about that 7.25%. So right now, the technical mortgage rate is a little bit below that, even though the yield is above the January. So really, I'm kind of watching this October to see if we break above this 30-year yield of 5.15-ish. And then we'll probably continue to go up from there, see higher rates for longer. But if we're able to start to see some relief and we can get back down into these levels that we saw in the end of 2023 and the end of 2024, we should start to see some lower rates, house prices go up, more buyers entering the market, things like that. So that's the mortgage rates. Now let's move back over to some more stats. So this week we see the median sales price go down a little bit. Last week we were right at 375,000. This current week we ended at 350,000. Actually, last week was showing 354, but we've been in this pretty consistent range here for the last. Let me refresh this. We've been in this pretty consistent range here for the last couple months now. Not really too much has changed there. Let me go ahead and reset these filters. Cape Coral, Fort Myers, North Fort Myers. Cool, we're back. So yeah, again, 350,000 median sales price. That's including condos, houses, townhomes, duplexes, Cape Coral, Fort Myers, and North Fort Myers. This range has been pretty consistent. If we see a breakout one way or the other, I will let you guys know. However, we've been pretty consistent, right between 335,000 to 415,000 here for the last year or so. Moving along, check out the closed sales this week. So we did have a pretty decent week in terms of closed sales. As you can see, pretty much since May of 2024, we've been on a decline. Market seemed to recover here in October, and then we started to see pretty substantial increases there in terms of closed sales. Kind of stagnated, leveled out, and then we saw a pretty big jump here in March. Now we're in May, we're holding pretty steady right here in this range, so hopefully that continues. Hopefully we continue to see these closed sales numbers rise rather than drop back down to this 40 where we were at in October. So that'll be a good news for sellers, being able to get more money for your house, having more buyers in the markets, more houses that are selling. Buyers, it's going to make your competition a little more difficult. You're going to have to compete with more buyers. There's going to be less listings available on the market as well. So those are all things to consider there. Percent of list price received. This is actually pretty good news if you're a seller as well. Last week we were about 95.5%, and this week we're all the way up to 96.5%. It's a 1% increase. Doesn't seem like too much. However, when you're dealing with minimum $300,000 houses, a 1% increase is $3,000. Some of the houses that we're selling are 500, 600, 700, all the way up to multi-million-dollar houses. So 1% of that is pretty substantial, especially as you start to go up in price. This also means too that buyers are finally starting to see value where the home price listings are at. So if this continues, then we should start seeing less price reductions, less people making super aggressive offers, and more people able to get what they're hoping to get in terms of selling their house. So hopefully finally the prices have come down enough where the buyers are like, hey, this makes sense for me, and they're not trying to continue to get more off of the price. So that shows that sellers are finally pricing in a comparable zone, and then buyers are also finding value in that zone as well. Percent from list price received, pretty similar here, 3.5%, but that's way 1% up from minus 4.5% where we were down before. Percent of original price received, this is coming up a little bit as well. However, this is still low, so this is showing that if you're looking to sell your house from the beginning, you want to price it aggressively. We're still seeing about 90% of original list price, so that means if you listed your house for $500,000, you're probably going to get $450 based off of these numbers. So what we've been trying to recommend to our sellers is just go ahead and price it around that $450 value. You're going to end up getting anyways create a exciting listing, create buyer interest, and be able to move on from it quickly rather than having your property sit for weeks, months, and you still not end up getting exactly what you're hoping for. Cash sales, this is interesting as well. So we have gone down a little bit. We were watching over the last couple weeks, this range has been about 40%. However, now we're down all the way down to 28.6%. That's in line with what we were at in December of 24.1%. So this is interesting. This means that potentially house prices have come down enough where buyers are finally able to feel comfortable getting a mortgage for the property. That could also be a lot of the new constructions that we have. The builders are offering better mortgage rates, closing cost assistance, rate buy downs, things like that to be able to get buyers into properties in loans that make sense long term. So that could be taking a lot of the cash buyers down as well. However, seeing that percent to list price as well as this percentage of cash sales, this does make me feel like the market is normalizing a little bit. Finally, the prices have come down to a point. Obviously, we're going to have to watch this over the next couple weeks to see what the stats continue to tell us, but this could be a sign that the market is starting to shift, where buyers are finally at a point where the mortgage makes sense and the house price makes sense, so they're not really trying to continually ask for more off the price. They're looking at their numbers, they're looking at their rates, they're looking at what they're going to pay, and it's all making sense. So hopefully we start to see more of that. For a while there, it just really didn't make sense. You would look at what you were getting. Hey, I'm overpaying for the house. I'm getting a high rate. My monthly payment's going to be way higher than what I thought. So that was deterring a lot of buyers. However, hopefully this is showing that people are finally starting to, one, find value, and two, able to comfortably afford houses. List the close days. So this is how many days the property was listed before closing. Right now we are at 100. Here we go. Yeah, so we're at about 100 days. So that is on the rise. We've definitely been seeing in this market houses sitting for longer, especially in higher price points. You're looking at 120, 150 days on the market, unless you're priced really, really well and aggressively. We are still seeing well-priced, well-marketed houses move quickly. However, if you're just trying to sell, just an average price at an average property at an average price, it's going to take longer. New listings. Let's check out new listings as well. New listings are down. So last week we were at 401. This week we're at 353. We are seeing this consistently drop since January. So as we had kind of mentioned last week, this could be a lot of the people who aren't as serious, not putting their houses on the market, realizing, hey, if I don't have to sell, maybe it's not the best time to sell if I'm looking to get 2022, 2023 prices. And these listings that are coming on the market are people who are pricing well and are more motivated to get their house sold. This is also interesting for the buyers as well. This means that there's going to be less listings on the market, less for you to choose from, and higher competition. As a seller, this also means that you're going to have a little bit less competition. So hopefully this means that more buyers are going to start coming to the property, and we're going to start seeing some price increases here soon. New pending sales. This is pretty good as well. As you can see here, from May 2024 all the way through February of this year, we were just not in a great zone. We were having about 200 pending sales every week. Now we're finally breaking out to where we're seeing 250, 300. We were all the way as low as 95 sales, 72 sales. So there was definitely a couple weeks there that were concerning. However, we are now on the up and up, and it looks like we're holding pretty consistently right here above 250 pending sales a week. So this is, as long as this holds here, those active listings keep going down, we should start seeing more competition, more buyers looking to buy, less active listings on the market, and the market starting to find its medium. Active inventory going down as well. So again, like we mentioned last week, a lot of these we like to call them phantom sellers. Some of these people are people that, they realized, hey, I could have sold my house in 2022, 2023 for $1 million. Now it's only worth $800,000. I'm gonna go ahead and list it on the market for $1 million anyways, just see if anyone wants to buy it. So we're seeing a lot of listings on the market that weren't people who needed to sell, had to sell, or really had any motivation to sell. They were just kind of listing to see if they could get a price that, was unrealistic at the time. So a lot of those people are either expiring, taking their homes off the market. We're seeing less new listings, and we're also seeing the pending sales increase. So the fact that we have gone down, 1,000 listings within the last month, that's pretty good, from 9,000 to 8,000. That's about a 10% drop. So the fact that we have lost 10% or so of our active inventory in the market is really is a really good sign for sellers. That means that your listings are going to be more competitive. You're going to be able to price them a little higher, hopefully, as long as the buyer demand stays there. And for buyers, this means that the market's going to start getting a little bit more competitive again. You're going to feel a little bit more of a urgency to buy something rather than like, hey, there's 20 properties that I want. Now you're probably going to start seeing more normal, maybe 5-6 properties that could fit. Supply of inventory. We are still a little bit high. This is just based off of the pending sales and how much active inventory is on the market. So even though we have been going down a little bit in both of those, our supply of inventory in terms of weeks is up. We're going to continue to watch this. NAR says a balanced range is around 20 to 30 weeks of supply, and we're slightly above that at 38 weeks of supply right now. Absorption rate. This is very similar to the last stat that we checked out, the supply. This is basically the percentage of the listings that go pending every single week. So 2.6% this week. That's slightly down from the 2.9%. So technically, the ratio of pending sales compared to total sale, or the ratio of pending sales to active inventory went down slightly. However, the less active inventory should start to adjust those numbers a little bit more. Basically, what I'm trying to say is, with the pending sales staying steady and potentially even increasing, and the active inventory going down, that absorption rate should start to increase. Pending inventory, again, this is way up. This is total pending inventory, so this isn't stuff that's pending in the last 7 days. This is total pending inventory. We've gone up 100 from last week. This is a good sign. This means that the market people are starting to, again, find value in these houses. They're starting to want to buy these houses. They're starting to place them under contracts. The fact that we have been seeing a lot of this pending inventory and not as much closings is pretty interesting as well. But the fact that the cash sales went down makes sense. So this almost, to me, makes it seem like there's a lot of more people buying in traditional means. They're getting mortgages. A lot of times we see these mortgages are taking minimum 30 days, sometimes 45 days, sometimes 60 days, especially if the borrower has to sell another property. They have to free up funds for their down payment, whatever they have to do. Sometimes those closings can take an extended period of time. So even though the properties aren't, closing and not as many new ones are going pending, the total amount of pending inventory on the market compared to the active sales is increasing. So as these deals start closing, as these homes get took off the market and less homes become available, we should start to see the prices increase, more competitive for the buyers, and sellers start to be well positioned again as well. Unsold listings. This is going to be listings that were withdrawn, canceled, or expired. So this is down. So as we had mentioned last week, this did go up a fairly bit here at the beginning of May. And then the last 2 weeks, it has gone slightly down. So that I personally think was a spike of those phantom sellers taking their properties off the markets. People who realized, hey, we're not really going to get this price. It either expired automatically, they withdrew it, they terminated their contract. So now we're seeing a lot of people who are priced where they need to be in order to sell their home on the market. So this is a good indicator that active inventory is going to go down. So you as a seller are going to have less competition to sell your listing. Your house is going to stand out more, and you're going to be able to get the most for your house. We're still technically in a buyer's market now based off of this data, but it does seem like this is the beginning signs of a shift. So we're going to continue to watch that over the next couple weeks. And if you guys have any questions about how any of this, fits you, let me know. I'm happy to have a call with you. We can get on a phone call, video chat, whatever. Go over whether you're looking to buy, whether you're looking to sell, what this means for you, make a plan of attack, whether you're looking to get your house sold, whether you're looking to purchase something down here. So whatever the case is, I'm happy to help you out. Give me a call, text, or email whenever you can. All my information is in the description below. You can schedule a call with me through a form, reach out directly, text, email, whatever. I'm here. So thank you all for watching this video. We'll see you all next week for our next market update, and stay tuned on Thursday for another property tour as well. So hope you all have a great rest of your day. I'm going to go enjoy the beach here for a little bit, and I will see you all soon. Thank you.